Today we are going to talk about the another crucial question of 2073. Boisak 17. Distinguish between accounting cost and opportunity cost. Derive long run cost curve and explain why is it elongated U-shaped. Also show the relationship between average and marginal cost curve. So at first we done about the accounting cost and opportunity cost differences. Secondly, we derive the long run cost curve. First one is long run total cost curve, second one is long run average cost curve, and third one is long run marginal cost curve. The reason behind the U-shaped LAC curve, the relationship between average and marginal cost curve, and these 3 point is about Welcome to NRB Officer YouTube channel. Today we are going to talk about the another crucial question of 2073. Boisak 17, and that question is distinguish between accounting cost and opportunity cost. Derive long run cost curve and explain why is it elongated U-shaped. Also show the relationship between average and marginal cost curve, which carries 10 marks. This is the question paper of 2073, Boisak 17, and the question number 1 is already been solved and uploaded the video of that question in our channel, and you can click on I button and see that video. Further, the reason behind selecting the question of 2073 Boisak 17 also mentioned on that video. So kindly check that video for better understanding. And moving forward to our question number 2, that is distinguish between accounting cost and opportunity cost. Derive long run cost curve and explain why is it elongated U-shaped. Also show the relationship between average and marginal cost curve, and it is having the 10 marks weightage. So here we can see 3 questions. First one is accounting cost and opportunity cost difference. Second one, derivation of long run cost curve and the reason behind U-shaped cost curve, and the relationship between average and marginal cost curve. In the earlier video we have talked about the how many pages do we need to write the answer. So recalling the same, if there is a diagram, if there is a picture we need to make, then we have to write 4 pages answer for the 10 marks. And if there is no any picture or diagram but only sentences, then we can limit it into 3 pages. That is the standard page limit. Otherwise we cannot attempt all the questions. If we are writing more than 3 pages, if there is no any diagram, and more than 4 pages including the diagram. So now we are moving forward to how to answer this question. Like said before, this answer must be into 4 pages. So this is the first pages of the answer, this one is the second pages, and this one is the third, and this one is the 4th pages of the question's answer. So first question is the distinguish between accounting cost and opportunity cost. So it may carry 4 or 3 marks. So we are directly writing the distinguish between accounting cost and opportunity cost. and here we have written accounting cost at left column, and the right column there is opportunity cost. And the basis of comparison there are three topic we have mentioned. First one is meaning, second one is comprised of, and third one is with the example. So accounting cost meaning, accounting cost refers to the cost recorded in the books of account of a firm, whereas opportunity cost is the potential benefit that an individual or entity loses by choosing one alternative over the others. And how does it comprise or made of? Accounting cost include only explicit cost, whereas opportunity cost include both explicit and implicit cost. And the third point is the example. So example of accounting cost is, accounting cost include anything a business spend like payroll, production cost, marketing expenses, and you deduct them from revenues in an accounting period. In the opportunity cost side, if you decide to spend your money on tuition classes, you cannot also spend it on buying books. The value of those foregone opportunities are opportunities cost. So into 3 points we differentiate the accounting cost and opportunity cost. Now we need to derive the long run cost curve. So this is how we are going to derive the long run cost curve. Now, since there is no specific cost curve mentioned, means there are three types of long run cost curve, that is long run total cost curve, long run average cost curve, long run marginal cost curve. But here not a specific cost curve has been mentioned. So to justify this answer, we have to derive all the cost curves. And that one is, at first there is long run total cost curve, which refers to the minimum cost at which given level of output can be produced. Second, long run average cost can be defined as the average of the long run total cost curve, or the cost per unit of output in the long run. And in the third one, there is long run marginal cost, that is defined as the additional cost of producing an extra unit of output in the long run, that is when all inputs are variable. And in this paragraph what we have written is, the long run refers to that time period for a firm where it can vary all the factors of production. That means we can change all the inputs and there will not be any fixed input. Now deriving all these cost curve into the diagram, and at first there is a long run total cost curve. In this figure we can see short run total cost curve 1, short run total cost curve 2, short run total cost curve 3, and by adjoining the minimum point of these short run total cost curve we can get the long run total cost curve. So same thing is written here. As shown in figure, the long run total cost curve is derived by joining the minimum point of short run total cost curve. Now moving forward to another cost curve, that is long run average cost. Now here also we have plotted 3 short run curve, but here we need to mention the short run average cost curve 1, short run average cost curve 2, and short run average cost curve 3. Now we are going to join the minimum point of this short run average cost curve, and by joining these all we will get the long run average cost curve. Now it's time for long run marginal cost, and long run marginal cost is quite difficult to make than the previous long run total cost curve and long run average cost curve. Here same like the short run average cost curve, means short run or long run average cost, we need to make same kind of picture at first, means short run average cost curve 1, short run average cost curve 2 and short run average cost curve 3 will be plotted, and by adjoining the minimum point we will get the LAC. It is same process of preparing as above. Now how to get the LMC curve? For that we need to make the short run marginal cost curve at first for all these three projects. Now what is the condition? The condition of equilibrium will be marginal cost curve will be crosses the short run average cost. So same thing will be happen in all three project. Now the adjoining point short run average cost curve and long run average cost curve, from the adjoining point we will derive the perpendicular line. So here and here, and from here we draw the perpendicular line. Now the intersection point of the perpendicular line and SNC we need to see. So in SSC1 here is the point, and here in SSC2 here is the point, and in third project it is the point where the perpendicular line meets the SMC curve. Now by joining all these points we will get the LMC curve. So LMC curve is derived by joining the point of intersection between SMC curve and perpendicular line drawn from the tangential point between SSC curve and LSC. Understood? Now another question, that is why it is elongated U-shaped. Now we can see that long run total cost curve is not in U-shape. Similarly long run marginal cost curve also not U-shaped, but identically we can see that long run average cost curve is only into shape of U. So to justify the answer we can write region of long run average cost curve LSC in U-shaped. Out of above mentioned LTC, LSC and LMC curve, LSC is identical U-shaped, and reason of becoming U-shaped LSC curve is explained as below. Now we have to explain the reason behind the U-shaped LSC. Now at point number 1 we are just going to elaborate or writing how LSC curve derived. Means we can see the description. In the long run the firm will select the plant size, means 3 plant we have made in the figure. So we have mentioned here, select that plant size which can minimize cost for a given level of output, and LSC is derived by joining the lowest minimum cost of the short run average cost curve, and thus we get the U-shape of LSC. Okay. Now second point is related with the return to scale. Okay. So we can use return to scale to explain the shape of the LSC curve. And what does return to scale means return to scale depict the changes in output with respect to changes in input. And we know that there are three types of return to scale, and it affects, or it is the reason of getting U-shaped of LSC. So during increasing return to scale, what happens? The output increases by a larger proportion than the increase in input. So as a result, LDC increases less than the rise in output and LSC will fall. Now, constant return to scale. In constant return to scale, the output increases in proportion to input increases, thus LSC remains constant. Now moving forward to decreasing return to scale. While decreasing return to scale, the output increases by a smaller proportion than the increase in input, and thus LSC also rises. This gives LSC its U-shape. So point number 1 is about the figure, and second point number is about the return to scale, and third point will be about the economies and diseconomies of scale. So another reason is, we can see, the LSC curve declines initially due to the economies of scale and reaches minimum when economies and diseconomies of scale are equal to each other, and the LSC curve start to increase upward due to diseconomies of scale in production. This results in U-shaped LSC curve. Now it's time for another tag question, that is, show the relationship between average and marginal cost curve. So relationship between average and marginal cost curve, we have written and underlined the topic. There is an important relationship between the marginal cost and average cost. Both curves, AC and MC, are derived from the help of total cost curve. Initially, both are false, reaches at minimum point and starts to rise. It means both curves are U-shaped. It talks about the how average cost and marginal cost are also in U-shaped. Now talking about the relation. 1. When the marginal cost falls with an increase in output, the average cost also falls, but both the amount of NC and the rate of fall in NC are smaller than the AC, so that MC curve lies below the AC curve. In order to understand this sentence more clearly, we can see the figure as well, and the figure is like this. So this one is MC and this one is AC curve. So when marginal cost falls, when marginal cost curve falls with an increase in output, average cost curve also falls, but both the amount of MC and the rate of fall in MC are smaller than the AC, means AC falls in speed, more speed than the AC curve, means more faster than the AC curve. Similarly, second point, what depicts the second point? When marginal cost rises with an increase in output, the average cost also rises, but same thing happens, means both amount of MC and the rate of rise in MC are greater than AC, means MC move faster than the AC curve. And now third point, when the average cost is minimum, the marginal cost is equal to average cost, thus MC cuts AC at its minimum from the below. means 1, 2, 3. These all 3 points can be defined or depicted in this figure. Now, last point, that is in the figure over Q1 to Q2, the range of output. These are range of output. The MC starts to rises. MC starts to rises while AC continues to falls. Means here we can see AC is falling from Q1 to Q2, but MC starts to rising from this Q1 to Q2. So we have covered this question number 2, and we can shortly review the answer of our writing. That means it has 10 marks, and we covered into 4 pages because in the this is about the curve, so we have to write in diagram as well. So 10 marks contains 4 pages. So at first we done about the accounting cost and opportunity cost differences, and their basis of comparison are meaning, second one comprised of, and third one example. And secondly, we derive the long run cost curve. First one is long run total cost curve, second one is long run average cost curve, and third one is long run marginal cost curve. And we mention the reason behind the U-shaped LAC curve. First one is we just mention about the figure of LAC curve at point number 1, and in point number 2 we explain about the return to scale, and in third number we talk about the economies and diseconomies of scale. And the last question, that is the relationship between average and marginal cost curve. And these 3 point is about the curve only, means it is about the falling, and point number 2 about the rising, and point number 3 about the MC cutting AC from the minimum point, and fourth one is talking about the MC is rising but AC is continuously falling from Q1 to Q2. So this is all we have mentioned and covered about the question of 2073 Baisakh 17, question number 2. Hope you understood all the matters clearly, and if you like this video, do not forget to stay connected with us, and for that do not forget to like, comment and subscribe our channel.